All right. Good evening, everyone. Hope you all are doing well and had a great trading day. Let's take a look and see where Bitcoin is at for now. So, on the daily time frame, taking a look, we have this beautiful cup and handle formation. We've basically, whenever we make this, we've been falling through it. So, it could be beautiful, possibly, but there's a possibility it's not going to be beautiful, right? So, as far as where we are with support lines, we did get a bounce off of this 62. Well, it was more like 62 238 level. It basically front ran my 62 146 support level that I put down. I'm not sure. Let's take a look and see if that's another fib. I'm very curious. I'm not sure if it would be from like this wick right here. Yeah, that aligns with my level. So maybe if you pulled it from this next wick up, doesn't look like that either. Maybe from this body. More so it looks like from this body of this candle right here. So the body from this, basically this bullish engulfing candle. Um, anyways, so is this the bottom for the week? It is definitely possible, especially since we saw a decent amount of sensitivity from it. Um, normally I would say this is not enough sensitivity. Um, but that being said, we had a Fed day yesterday, and we're going into a 3-day weekend. So tomorrow, I believe, is Juneteenth. And so we have a 3-day weekend, and I'm expecting price to basically chop probably. I say probably because there is a chance that we will see movement. It is low volume, so it could be treated like how we saw this Wednesday being treated. Where it's just pure chop. We're within $1,000 $1,500 range at the most. Um, so just kind of keep that in mind. Or sorry, it wasn't Wednesday. It was, I want to say, Tuesday or Monday. Anyways, there was one of the days this week that was just basic chop. I think it was, yeah, I think it was like Tuesday or Monday or Tuesday. Both of these were kind of choppy, to be honest with you. But anyways, that being said, last weekend we did have quite an expansive move on Saturday and Sunday, so that's probably why Monday and Tuesday chopped out. Wednesday and Thursday gave us more expansion. So today or this next candle for Friday, we could possibly get, our compression candle again, like one of these, because we had so much of an expansive move these past 2 days, right? So just kind of keep that in mind, guys. I definitely am of the mindset that this could be our bottom, at least for the week. Not saying it's going to be the bottom for next week or bottom of, even for the rest of the month, but this could definitely be our bottom short term, okay? Now, when it comes to, this 3-day weekend, even though I'm expecting chop, the last few times that we've had 3-day weekends, and there's been a dump like this, they catch a lot of people off guard. A lot of people will short the market and just kind of leave their computers or leave their phones and just not check it until Monday or Sunday afternoon and find out that they're wrecked, right? So just be careful trading these next couple of days. It is going to be extremely, low volume, especially like I said after the Fed meeting, and we have a 3-day weekend. So just be aware of that. There could be a lot of false moves, a lot of chop, potential reversals, that type of thing. So just be very cautious about that. Let's go ahead and dig into our 12-hour. So our 12-hour, again, showing that cup and handle formation. This could even be, if this starts curving up, this could be like your inverted head and shoulder, right? So shoulder, head, right shoulder, to the upside, right? And I think this measured move, let's see, if this were cup and handle or an inverted head and shoulder, I mean, you're looking at about back up to 69.4. So that would take us around to that 69K level that I've been targeting up to the upside here. So that is, possible in the cards. I mean, we could see, that happen for the end of June. I definitely think that that type of move would probably have to happen over the course of multiple days, right? So just kind of be aware of that if we were to go back to the upside. Your bearish case, obviously, it should be pretty obvious by now, but this should basically follow kind of this bigger pattern that we were in. You know, we kind of did that same cup and handle thing, and then we just completely fell through. So this is kind of like a miniature version of this bigger version right here. Let me get rid of my, so you can see it better here. Oh, maybe this is just a local. Yeah, there we go. Local fixed volume profile here. So you can see we're kind of doing the same thing in a miniature version as we did here, right? So this could easily just fall through. That's your bear case scenario. And honestly, in this environment, like that's your more probable scenario. Doing a long right here is your least probable scenario. But that being said, you know, it is possible that we get a bounce here. Okay, I don't want to leave that out of the cards. Um, Going down into the 8 hour, you know, kind of seeing the same thing. That's still that cup and handle formation. So it's going to be very interesting to see what comes of this. You know, one thing I wanted to do as well is I wanted to pull from kind of a fib level from this bottom, this local bottom, all the way up here. And you can see, you know, we are technically, this is my 50% line. Anything above this line is considered a premium within the range, and anything below the line is considered a discount. We are hanging around the 50% mark, so it's kind of like an indecisive area, but you know, we are below it. So it is technically in a discount down here. So anytime that we drop down here, you know, and we are looking for, you know, basically patterns, like even if we get bearish patterns, bearish structures, until we lose this low at 59-ish K, you know, bear patterns will break out to the upside more than likely because we're in a discount. So just kind of keep that in mind. We are below the 50% line, so anything that's considered like a bearish pattern, there's a decent chance that it's going to actually break out to the upside rather than break down. Um, you know, you can even kind of see this. I don't know if in the 1 hour, you know, you can kind of see this up here, right? So, you know, for example, this would have been a falling wedge, right, up here, but we are in a premium making a bullish pattern. And so what happened? You know, it broke out a little bit, but then it fell down. It basically, patterns will fail depending on, you know, what environment you're in, whether you're in a premium of the value profile or whether you're in a discount of the value profile. You know, same thing goes here, right? You could technically call this, you know, a head and shoulders type of pattern right here, right? Shoulder, head, right shoulder. However, it was actually an inverted head and shoulder that reversed to the upside. Same goes for this. You know, you have your kind of have a symmetrical triangle right here, right, guys? So normally, right, those break down. However, you're in a discount doing a symmetrical triangle, it broke back up to the upside. So keep that in mind when it comes to patterns. If you guys do play patterns, you kind of need to understand the environment or the premium or discount area that you're in, as well as, you know, the time of the week you're in, right? So we know we've had a bearish week. We're trying to look for a bottom. There's a potential that this rolls over, goes into Friday, you know, to bottom on Friday. However, um, because we had such a strong move and we've been moving down this whole week, you know, there's a decent chance that the bottom is now in or we're getting very close to it. Okay. So I do want to say that, you know, obviously the bearish case scenario is we roll over, but the bulls do have a chance here, is my point. And obviously, when I do TA with you guys, I just always want to say that, you know, I'm trying to be as non-biased as possible. I want to give you guys both scenarios, right, without adding my real 2 cents in there of what position I'm in or what I'm doing. Okay, so that is going to be your bullish and bearish scenario. Okay, now going into liquidity and taking a look here. Um, let's see. Let me undo that move there. So on the daily, let's check off all these boxes here. Still have a lot of liquidity to the downside. So it is putting on the impression that we're going to keep moving down into this 46 area, at least, you know, in my other 50s areas that I've been talking about. I don't know when, but this is, you know, obviously what it's still showing us that's probably going to happen, okay? Going into the 4 hour, let's go ahead and get rid of some of this here. So you can see we dove into some of this liquidity like I discussed earlier. We still have quite a bit up here, leading us into that 69K area even. We don't have a lot of bridges for right now to get us up there, but nothing's impossible. And a lot of times on the 4 hour with the 25x, it won't take out everything. It will take out a portion of it and then reverse to kind of invoke, that other sided liquidity. So, there's a good chance that part of this gets ignored and we do reverse back up. Okay. Um, 10x doesn't really show anything. I mean, we have some green liquidity down here around 57-ish K. So just kind of keep that in mind. That's some good concentrated liquidity. Going into the 1 hour, let's take a look here. So the 1 hour, I mean, like I've been telling you guys, probability wise, we're going to roll over, right? But I did give you the case for the bulls as well. So, when it comes to 100x, you got a lot more down here, this green liquidity. And this honestly ties into that 62, 140-ish area. We could still, round this out, take out this double bottom right here and be bullish, right? We could still hit my support target that got front ran today at 62 140 and still be bullish and just completely bounce from here and come back up here, right? So keep that in mind, and that's honestly what Bitcoin's been doing a lot lately, right? It's been running out that local bottom and then just completely reversing after that. So I would not put it past it to do something like that. And then you, of course, have some yellow liquidity down there. You have some yellow liquidity with some concentrated red down around 60,300. So that definitely is a possibility that we take out this low even for this week. Now more, this is obviously more short term. So let's take a look at the 15-minute. 15-minute, it looks like you're curving up. Your moving averages are curving up as well. So we do get, our 200 MA cross with the golden cross, the 21 MA crossing. That's going to be a really good sign for the bulls, right? So, anyways, guys, that's what I'm seeing on Trading Different. This is my liquidity tool that I always talk about. You guys can get a 10% discount if you want to use this as well and keep up with me on this. It's tradingdifferent.com/code/Sean to get your 10% discount. So feel free to use that. And like I said, you'll get a nice 10% discount on the tool. Now, if we were to compare this liquidity tool with our free order book here on the right, which is Kiyotaka, you can see that there's obviously more orders to the downside. It's telling us that there's, a decent chance we're going to take at least some of this out, which kind of leads into the idea that we're going to wipe out that double bottom first before we have a thought about reversing, which kind of lines up with our time of day too. I mean, we just opened a daily candle, so we got to make that wick to the downside, which aligns with that. So I am open to that idea if we cannot keep this low right here. I do know that, going back to this chart real quick, I mentioned that 62 146 number, or no, sorry, 62 467. That's like your local 786. So if we can't hold that, more than likely we're going to take out this double bottom, and hopefully bounce at 62 146 or 61 709 right here. So just kind of keep those levels in mind. Let's do one more thing. Let's take a look at the simple map on Trading Different and see where that's at. So the simple map, let's see, let's go here. So right here, this graph talks about the scalping time frame. So we're talking about the 1 hour, the 15, the 5-minute. And you can see that there's still a decent amount of 100x liquidity right below our price range. And then, as far as the short liquidity or right above our price range, you have more of the 50x, the 100x, at least right next to our current price. The unfortunate thing is that you still have a lot more liquidity in general to the downside, so there's a decent chance that we start wiping this out. However, you can't use this as your only indicator, right? I mean, there could be, at any given time, we could reverse from taking some of this out to the downside, okay? So just kind of keep an open mind with that. Let's take a look at our swing levels. So this is going to be your 25x, your 10x, your 5x, your 3x. This basically represents your 4 hour and your daily. So you can see here, we don't have a lot of, 25x and, even 10x nearby, right? It shows it more to the downside. So again, painting the picture that there's a good probability we move down before we move up, right? On the bigger time frames. And obviously we have a lot more just liquidity in general to the downside than we do close by to the upside. I think your only saving grace is probably the 10x. You have more 10x liquidity to the upside around 68.4 than you do going down to 59 K area. So again, this is through trading different. Great tool. They have a whole set of tools that you can use. Definitely, I feel like it's definitely worth the money here. Like I said, use my code to get that 10% off. But anyways, guys, that is my update for tonight. Be careful, be safe this weekend. Like I said, just if you are planning or you do have a bigger position open, whether it be short or long, just be aware of the low volume and the possible volatility along with the chop that I've been talking about. So, anyways, guys, take care. I will talk to you all tomorrow. See you later.